This is your host and real estate coach, Rafael Cortez. You are listening to the REI Wholesaling Podcast, where every week I bring you the real life case studies and strategies you need to level up your real estate wholesaling business. If you haven't done so yet, go to reiwholesaling.com. Again, that's reiwholesaling.com. Sign up and get free access to your Wholesaling 101 course. This free training teaches you step by step everything you need to close your next wholesale deal and start making big money now. Fam, what's up? Welcome back to the CEO Pulse Podcast, where you get the real, the raw, and the mind of entrepreneurship. Let's talk to Kurt Warner. He's out of Toronto, Canada, and he's been investing in multifamily and commercial since 2018. Now he's helping a lot of people when it comes to the education side, doing groups and building communities that way. But he has a really good background and experience when it comes to analyzing some of those commercial deals. Like right now, we're going through a lot of turmoil when it comes to the market, the shift that's happening, what's going on with interest rates, what's going on with, inventory going down, up and down, right? So a lot of people are pivoting in this, in the space of real estate. And I see a lot of people transferring over to multifamily, commercial, and it's becoming a little bit more popular than it used to be, a couple of years ago, right? So I'm excited to dive into your perspective on that and actually how you go about analyzing, some of these deals and really, digging into the meat and potatoes of it all. So Kurt, thank you so much, man, for stopping by and sharing your wealth of knowledge with us.
No, absolutely. Pleasure, Rafael, to be on the show today. And hopefully I can share with your audience some of what, I've done, what we've done as an investment group, and then what we're doing to help others as well.
Beautiful. Yeah, man. So give us a little bit of a breakdown on, you started investing in 2018. What were you doing before you jumped into commercial real estate?
Well, I've had an interesting journey. So I was in university from 99 to 2004. I ended up not graduating. I was a psychology major, and I realized kind of early on that I did not want to become a psychologist.
Oh.
So towards the end of my tenure there, I actually went and worked in a sales job, actually selling newspaper ads to small and local businesses. And did that for a couple months. And I'm not sure if anybody that is listening this has experienced this, but I was actually let go 2 months in. So went through university, hadn't graduated, first job, got let go. So I was trying to figure out what I wanted to do kind of with the rest of my life at that point. Yeah. I was actually at a wedding, and a friend of mine that I was with, they traveled a lot. They were making good money. I had no idea what they did. And so we spent some time kind of chatting. And what she told me is she worked for a company that taught people how to invest in real estate and financial markets. And so I had a background doing property management for my mom for several years. So I thought, hey, why not? It's a job, travel, let's apply. So I got the job. Right? Yeah, give it a shot. And so I got the job and started working there, and slowly realized that although I was involved in real estate, I really didn't understand what it meant to be an investor. So I had the opportunity to spend time with, different trainers, mentors, and coaches in the real estate and financial market space for the year. So that was 2004, and actually did my first investment deal in 2007. It was a foreclosure or pre-foreclosure property up just outside of Toronto. And unfortunately, it didn't go well. We ended up losing a little bit of money in that deal. And that kind of got me out of real estate and said, no, real estate doesn't work. I want to start trading.
Was it like a flip or something? Is that what you guys did on it?
It was really a property. It was turnkey. It was just a situation where, a couple was divorcing, and it was a beautiful home. Yeah. But what we didn't do, we didn't stage it. We didn't do anything to, the outside to really get that curb appeal going. Yeah. And we worked with the wrong realtor. Unfortunately, didn't really understand what it was like to work with an investor. Yeah. So we ended up selling it. Timing also with the market at that point in time was starting to soften up here. So we ended up selling it at a little bit of a loss. But it was a great lesson, I think, overall. Making sure to work with the right people, the right teams, and make sure you understand your strategy.
The crazy thing is that, when we kick it off, right, we just don't know what we don't know. And it's incredible to take a step back from that as time progresses and you start getting a little bit more experience, and then you think back at the old self from 5 years ago even, and it's like, man, things were so different in my head in terms of perspective. We just don't know what we don't know. I feel like when we embrace that notion, a lot of things change.
No, absolutely. Absolutely. I think
Yeah.
that one of the things as an entrepreneur and investor is that we always have to remain open.
Yeah.
And, we can't go into any deal, regardless if it's, the fifth time you've done that deal or your 100th time that you've done that deal.
Yeah.
Every situation is going to be different.
Yeah.
And something that one of my mentors taught me a long time ago is to remove ego from everything that you do. And he said, ego stands for edging God out.
Oh wow.
So
Yeah,
you
I
need to
like
make sure that, so you need to make sure that you remove your ego from everything that you do and just kind of be humble
that.
with everything.
Yeah, and open to perspectives, as I like to place myself in rooms where I feel like I'm inadequate, right? Like, what am I doing here? Surround yourself with people that way. I had a similar starting phase. Got into real estate, this was around 2009. Jumped on my first flip. I just didn't know what I was doing, and I thought I did.
Mhm.
So many mistakes, man. So many mistakes. So, anyways, I want to make that point. I didn't mean to cut you off there, but yeah. So you go into you kind of lose faith early in the 2000s in real
Yep.
estate, and then you circle back around it. Um,
Yep.
when you came back into real estate, did you jump right into commercial stuff, or did you kind of dabble in something else?
We got right into multifamily. So myself and my two business partners with JFK Properties,
Yeah.
we talked about the idea of starting our own business or doing something together, probably for a couple of years.
Yeah.
And I think it was one of those situations where we're out having lunch, and I think we were all frustrated with our jobs at the same
Yeah.
time. And we said, okay, well, what are we going to do that's going to be different, that we can do over the next, 8 to 10 years to
Yeah.
then be able to transition fully out of our 9 to 5s. And we decided real estate. So that was, I think, around June, July of 2018. And then we started, taking courses. So the company I work for, as I mentioned, taught people how to invest in real estate. So I said, if we're going to do this, let's not do it like other people do, and like go out there, try to do it on their own, make mistakes. You do learn from them, but it takes a longer time
Yeah.
versus learning from other people's mistakes.
Yeah.
So we started taking courses throughout the rest of 2018. We got incorporated in December. And then we got our first investment property in April, where we actually closed on it, and it was a 6 unit property.
Oh, wow. What was the strategy on that? Do you guys do fundraising, or how? I mean, getting into multifamily it sounds like this big daunting thing. Obviously, you guys, went out there and got schooled on it first and did things right. I went straight to YouTube University and I got confused. I kind of, my brain when I was trying to do my first flip. But how did you guys break into it? Did you start, fundraising? Did you have your own capital, or how did it work?
So what we did is we actually leveraged our personal homes. So
Oh
we
wow.
took out home equity line of credits,
Yeah.
each of us, and that was, really how we started. And I think that's something that a lot of people trying to break into real estate investing and actually hold properties, they take that for granted. If people have owned their homes, for several years, they're probably sitting on quite a bit of equity. And again, depending on the market, depending on the country they're in, or they have friends or family members that have had homes for a long period of time that have a lot of equity that's really
Yeah.
untapped. So that was the source of capital for our initial deal. And as we've kind of progressed, we have brought in other investors from the outside, but a lot of them are doing the same thing where, they've owned their homes for several years and they're just getting home equity lines of credit and doing it that way.
Was this deal in Canada, or somewhere else?
Yeah, it was in Canada. So we actually, when we started, part of what I was good at as we went through courses was analyzing, markets, and also analyzing the properties themselves. So we determined to go 4 hours north of Toronto,
Okay.
so quite a bit of a hike outside, but it's where the cash flow was. It's a market that had several different industries in it, so it wasn't reliant on just one industry. It was a growing population as well, which was good. And when we looked at the amount of rent people were paying versus the price of properties, that ratio was really strong. So it provided us with great cash flow. And yeah, so that's where we kind of ended up, and we went up, built a great power team. So unlike the mistake I made in 2007, I actually made sure that we were working with a good realtor, we're working with a good property management company and great mortgage broker. So as part of our team to kind of help us get started and also grow.
Yeah. You mentioned the power team. It's crucial, man. It's crucial to tap into resources, right? I
Mhm.
feel like it's not about being or having all the resources, uh, you know, within ourselves, but being resourceful and knowing who to reach out to, talking to, good title companies, good real estate agents, lenders, and having those in your team. I mean, they almost become part of your employee base,
Mhm.
because, I mean, they have their own interests in alignment with what we're trying to do here, right? So,
No, absolutely. And I know that there are several investors that, especially starting out, and even some that are more experienced, that become what I like to call CEOs of their business,
yeah,
and not chief executive officer, but the chief everything officer,
yeah,
where they're trying to do their social media. They're like, okay, I'm
yeah,
going to go get my real estate license because I'm going to broker all my deals. I'm going to actually become a mortgage broker as well. So that way I can, be on that end of it.
yeah,
And while there is definitely a benefit to doing that, there comes a point in time where you start to get diminishing returns, where
yeah,
the more that you're doing, you're starting to do activities that are not paying a lot. So I know as an investor, for example, if I'm the one that can negotiate a good deal and let my power team kind of do the rest from my realtor, my mortgage broker, my lawyer, my property manager, my return on time is a
yeah,
lot higher than if I try and go out and do everything. So
yeah.
that's kind of how we've really built our business, where we try to be as hands off as possible.
Yeah, that's huge, man. The tendency to micromanage, can be there, right? Especially when you're building it up. It's like your own little ball of wax, and or your baby. So it
Mhm.
can be a little bit, difficult to delegate when you're, putting deals together. Then you end up babysitting and all that stuff. I've been guilty of that, of all of that in the past. I like how you framed it, chief everything officer. That definitely resonates, man. It's for me, and personal experience, right, it was a little difficult to kind of start stepping away from things early on. But what happened was that I started getting burned out. I started getting
Mhm.
burned out when I had all the headaches on top of me, and that sort of thing. So delegating little by little, had to become a necessity, as opposed to this intentional, thing that I just started, going about. But you make a great point. If you have a good, solid team, and as a CEO, executive officer, you put the time and effort into building that team. You get smart about that. You're gonna have a really good foundation and do a lot more, focusing on your highest and best.
No,
Right.
absolutely. It's like running any business.
Yeah.
When it comes to real estate, you're going to go out and work with different people. You're going to hire people,
Yeah.
and they might not always work out. And I think you have to be very vigilant about making sure that you have the right pieces of your team, because it is, at the end of the day, your business.
Yeah.
You know, Real estate really is about people, but you have to have the right people around you.
Right.
So we've switched, for example, like our lawyer. Not that our initial lawyer was bad, but we just didn't resonate
Yeah.
with him. So we ended up finding a lawyer that we did resonate with. We actually saved money. He was a little bit cheaper as well, just as good. But you have to be willing to switch that out, and you have to be willing to look at your team and say, okay, who's working? Who are my A players on
Yeah.
this team? Who are my B players? Who are my C players? And if that means you need to cut, the bottom few and maybe transition out, it's only going to make your business stronger. It's going to make your life easier as well.
And yeah, and sometimes that can be a bit difficult, right? Having those tough conversations.
Mhm.
But it's a necessity, man. It's a needed skill set that we need to develop as business owners.
And the
You were talking
reality
about
is,
Yeah, you were talking about analysis, and looking at numbers, like how to tap into the markets. I think that's one of the biggest questions. I know it was one of my biggest questions when I started looking at just different deals in different areas.
Mhm.
Looking at understanding what value add opportunities were, especially in the commercial space, when it came to multifamily. Can you give me your process, or give us your process on how you actually go about doing an analysis? of a one, an area, and second, a property to know whether or not it's a good deal. There's something there.
Well, from an area standpoint, like you get a good gauge based on a few factors. One, as the market changes, as we're seeing interest rates go up, we saw property values kind of spike over the past couple of years as we were going through the pandemic.
Yeah.
It's become more difficult to find cash flowing properties in major markets, especially where I live. So we have to go further out. Now, that going further out means that you're looking at areas that probably have populations of 30,000, 40,000 or less, versus several years ago where you could go into markets with 50,000 plus, which are easier to finance,
Yeah.
and still find cash flowing properties. So you're having to go into smaller communities. Now, going into smaller communities doesn't necessarily mean that that's a bad thing. What you need to look for is that that population is not aging, like where there are no young people coming in. So you want to have a good mix of people that are 20s, 30s, kind of younger, that are actually driving the economy, where they are coming in to work and to have families, which means they're going to be there longer term. Also want to look at are more people moving in than moving out. If you're in an area where more people are moving out of that city, then you're going to run into some vacancy issues, which is also not good. And you also want to avoid areas where possible, where there's only one main industry or company that hires. Because if anything happens to that business or that company or that industry, let's say that you're in the automotive industry, for example, and that's really all that area has. If something happens in the automotive industry, you're going to have a lot of unemployment, a lot of layoffs, which is going to impact also your tenants' ability to pay rent. So you want to make sure there's some diversification there as well. So that's what we really look at when it comes to the multifamily space, when it comes to the market itself. Those are kind of the key factors. Now, in addition to that, we also look at, what's the cost of living, as far as, how affordable is housing there? How affordable is rent there? Again, you want to make sure that you're in an area where you do have upside potential, where you have the opportunity to increase rents, but still stay and provide people with affordable housing, based on the economics of the area. And then when it comes to the property itself, what we look for, we start off initially with how much does it cost per unit? And that gives you a good gauge. Some areas, for example, if you're in Toronto, you might be paying $300,000-$400,000 per unit. And you're talking about maybe something that's like a duplex or triplex. Wow. Like it's a crazy market here. So we try to look for markets where we're in and around that right now, 125,000 or less per unit. So again, we're having to go further outside of major centers, but that gives us an initial indication. And then we dive into things like, what's the cap rate in the area, so the capitalization rate. And then we also look at other factors like your cash on cash return as you're looking at it. And also, sorry. And also what we look at is the cash flow per unit per month. And that's a big one for us. Like we want to have every unit at least producing, and this might scare some people, $75 in positive cash flow a month.
Wow, when $75?
Now, when we say that number, that's what a lot of people think. But I've met a lot of investors that, say, okay, I have my rental income, I have my taxes, my insurance, my hydro, and my gas, and then there's my cash flow after my debt service.
Yeah.
And we're like, well, are you managing the property yourself? Well, no. So you got to pay somebody to do that. Right. Are you factoring in vacancy rates? Well, no. My property is never vacant. Well, guess what? It will be at some point. It will be at some point. So we factor, a 5% vacancy rate in most markets, sometimes up towards 7%. Property management, depending on the area, could be anywhere from 7 to 10. If we have a larger building, it could be as low as 5. But we always initially factor in something a little bit higher when we're doing our initial analysis. And then we also have repairs and maintenance. The older the building, the higher the percentage. So if we're dealing with something that, let's say, is 40, 50 years old, we're probably in about that 5 to 6% initially until we get our inspection done. And then we will adjust accordingly. And then other things that we also put in. We put in a contingency fund. So we always set aside money. It's a percentage of income that is just in case money. So this is outside of repairs. And then we also factor in accounting and bookkeeping. Like we, initially did our own accounting and bookkeeping, but we don't anymore. So we know as we bring a new property on, a portion of that income has to go to pay the bookkeeper to keep the books up to date for that building. So we factor all of that in. That's why our cash flow per unit per month is probably a lot lower than other investors, because we put everything in. So when we present this opportunity to, a potential joint venture partner or another investor, they see that we have done all the work and we're very conservative. So if we are coming in at, okay, we're looking at $80 cash flow per unit per month, this is a very conservative number. And then we also have a strategy how we're going to actually go in, do some tenant turnover, increase the value of the units by, modernizing it, maybe doing like we're in the process of right now of doing a value add in a duplex. We just finished one in a sixplex that we have. So we can increase rents, increase the value of the property, and then look to refinance, pull some money out, and then move on.
Yeah. You're mentioning a bunch of things that are not always considered, right? Like when, okay, cool, yeah, I'm making I don't know, my rent is $1,200, and my payment on this thing is $800, so I'm cash flowing 400. Well, not necessarily. I mean, a couple of months of vacancy there is going to wipe out any of those profits. That's one thing. So you have to allocate like that emergency fund to that. There's a lot of things that need to be, kept in mind. Is the cash flow the only thing that you look at to decide whether or not you're going to be jumping into a deal, or is there something?
Cash flow is king. We will look at some deals that maybe have a little bit lower cash flow if there's that upside. So if it's a situation where they've had long-term tenants, the current owner has not done a good job of increasing rents slowly, then that's something that we would consider. But even before we get into that scenario, we always have a property manager. We have a realtor obviously go through, but we'll also have a property manager go through the building. So a lot of times they know the area, they know the building already, and we'll work with them on the strategy. And if that strategy might mean, okay, our best scenario is to have vacant possession, which we've done a few times, then that's something that we'll add to our offer. So one of the things, and again, it depends on where you live. Where we live and where we invest in the province of Ontario, it is very difficult to get somebody out of a unit. That process could take up to 8 months to get somebody out. There are strategies like cash for keys and things like that you can implement, but in general, you're looking at a very long time to get somebody out of a unit. So rather than us deal with that as the new buyer, that's something that we'll put in agreement to say, we would like vacant possession, and then have the existing owner go through that process on their end.
Yeah. It's a lot of contingency that or future pacing that has to take place when you're looking at something like that. A lot of the stuff that I do, for example, is in the wholesale space. So we wholesale a lot of single family residences. So we've done commercial as well and that sort of thing. And yeah, I mean, whenever you come into a situation where, okay, you take the property, your buyer is going to take it from, take the property at close of escrow, but you're still caught with that, tenant that's not willing to leave. And they're just leveraging everything they can, it becomes a real nightmare. So future pacing is huge, man. I'm planning for that, that type of contingency.
Absolutely. And, we just went through a scenario where we acquired a property. We, verified, rent rolls and everything like that. We verified the income on the property. And as soon as we closed, one of the tenants didn't pay. They'd been paying the old owner, but they didn't pay. So we're in a situation where, unfortunately, we were negative cash flow. It wasn't a lot because the other tenant was great, and this tenant would pay every once in a while. So finally, after it took us almost 8 months, to get her out, and now we're going through the process of renovating that unit, and we're actually going from, I think that she was supposed to be paying $1,300 a month. And after renovations, we'll be charging $1,750 a month plus utilities. So that's a huge increase in the cash flow from that building, but more importantly, the value, because now our net operating income on that building is jumping up quite a bit. So now when we look to refinance, the building's going to be valued higher as a cash flowing property. So, which is good.
Yeah, it's incredible what value add moves make on the commercial space, man. It's the easiest way to ramp up, the value of what you already have, right? Especially if you want to do a cash or burst strategy.
Mhm.
I mean, it's definitely a must to come in and do everything you can to improve the areas. Design goes a long way. I mean, I have a lot of friends that's their main strategy when it comes to, okay, we're doing a value add move, we're consolidating maybe common areas into one strategy, for example, that I can think of. A friend of mine did on a, I think it was an eightplex, but they had a common area on the back of the apartments, right? And they started just segmenting those and gave everybody their own little backyard.
Mhm.
So increase the rents per unit, and then they dropped the overhead of that common area maintenance. And I mean, their NOI just took a big bump.
Mhm.
So yeah, it's how do you go about finding the deals? I mean, staying steady on that consistency can be a bit tricky. Do you guys have a specific process of finding deals?
Initially, it was a lot of, I think before our first one, I probably looked at almost 100 properties.
Hmm.
And we were looking in really two markets, so 100 properties, just analyzing, analyzing, analyzing. What has helped us is relationships. I think a lot of people take it for granted, the power of relationships, not only with a realtor, but also relationships with wholesalers like yourself,
Yeah,
and also relationships with other investors that are in the same space. Like, there are a lot of opportunities out there
yeah,
and different types of deals. So we might come across a multifamily that we're like, okay, the numbers either A, don't really work for us in our strategy, or maybe we don't necessarily like that market. But there's other investors that do like those numbers and do like that market. So being a part of communities as well really helps if you do have a deal, maybe to wholesale it. Sometimes it's even just like, hey, not even worry about getting into contract. Just, I know you're looking in this area. Here you go. And hopefully there's some reciprocity down the road if they find something that you like.
yeah.
But we really don't hunt a lot for deals. I'll probably spend, I'd say maybe a couple of hours a month actually out there looking for deals. Most of what we find will either come from wholesalers that are posting or will come from realtors.
Wow, tapping into that resource base. Um, and when like, are you still funding your own stuff, or are you bringing in other investors and then just JVing and partnering up with other people to come up with the money?
We've started JVing and partnering in 2021. Um, so last year.
Hmm.
And right now we're at a phase where we are looking to do more partnerships. So I'd actually called today with a couple investors where we're looking at self-storage and just trying to pool resources together.
Yeah,
So, finding the deals, analyzing, which is kind of what our strength is. And then one of the gentlemen, they're extremely good at raising capital. So saying, hey, this is going to be an all cash buy. We have a VTB, so a vendor take back for a large portion of it, and then just raising capital privately. So not going through conventional lending for the
yeah.
rest of it. So just kind of pulling resources and figuring out how we can, structure something that benefits everybody.
When you say BTV, what does that mean?
So vendor take back. So the seller will hold a portion of the mortgage. That might be in first position. So them acting as the bank. If it's a smaller amount, sometimes they'd be in second position.
Gotcha. We call it, and I've heard that term before. I thought that's what it was, but we call it creative financing or seller carry.
Yep.
Yeah,
Yep.
same thing.
Yeah.
So yeah, it's incredible, man. A lot of people are open, and I know, like, you're in Canada. You're still all of your deals are in Canada still,
Yeah.
or
All of our deals are in Canada, but we are certainly open to looking at the US as well. I think
yeah,
we've gotten to that point now where, we realize that the US market obviously is a lot bigger than Canada,
yeah,
population wise, opportunity, but the cash flow in the US is a lot better. So I have a few friends that are Canadian that have actually moved to the US and invest in the US.
yeah,
And they're also now starting to try to scale from like short-term rental into the multifamily space.
yeah. When you said that $75 number, usually what we look for, it's a minimum of 300
Yeah.
per door on our end, and that's factoring in expenses, and I mean we're looking at NOI.
Yeah.
But yeah, so. It's incredible what people are or the conversations, right, that people are willing to have now when it comes to creative financing and structuring deals that way, just because of you have a lot of people who are tired landlords. They're just sick and tired of dealing with tenants. They've properties are run down because they lost just the that willingness to put up with the properties like you're supposed to, right, when you're a landlord. There's a lot of stuff like that out there. Creative financing goes a long way when it comes to structuring deals, and it's definitely a really really good tool to implement. I know, I mean, your stuff is in Canada, but still the fundamentals are very very similar.
Oh
Similar.
yeah.
Yeah.
Yeah, the fundamentals are definitely very similar. The way we structure deals, real estate in Canada and the US is very much the same. Markets are going to be a little bit different, but you guys have different markets throughout the US, just like we do here. I think
Right.
one of the things when it comes to getting creative and working with sellers, especially now in a higher interest rate environment, and some people are scared to do it, but actually have a conversation with the seller.
Yeah.
Some people get intimidated, like, oh, I don't want to talk to the seller, I got to go through my realtor and they got to go through their realtor. At the
Yeah.
end of the day, we're all human. And to be able to either, if you can meet them face to face physically, maybe over coffee or something like that, awesome. If it needs to be on Zoom, everybody's used to it after the past few years, but it's a great way to actually establish a relationship. And you want to actually work with the seller. You don't want to work against them.
Yeah.
So if they have a need for, and they'll tell you what they need at the end of the day. If they're like, okay, on this deal, I need $1 million because I want to invest in a new business and I need $1 million to walk away. And they're looking at a $3 million property. Well, right now, okay, well, if they get a million, there's still 2 million, maybe they'll do some seller financing on
Yeah.
part of that 2 million. Or if you're dealing with somebody that is, okay, 80 years old and they're like, okay, I want out, I want to retire. I need 500,000 so I can, buy my beach home in the Dominican and that's it.
And forget about the
And
world. Yeah.
and I don't want to pay all this tax. Awesome. Well, if you hold some financing, this is how we can structure it. So you get your 500,000. So you go do what you do. You'll get some cash flow, defer your tax payments for
Right.
maybe the next 5 years or so. So there's ways to actually create a deal that works for both. And it's not like I win, you lose. It's okay. How can we both win at the end of
Right.
the day? And in the higher interest rate environment, unlike what we came out of, sellers are starting to understand that, okay, I'm going to have to, step outside the box here, or I'm going to suffer on price. So if I
Right.
want $1 million for this property, maybe I can't get a million today, but I can maybe structure a deal where I get 800,000 today and get close to a million over the next 5 to 7 years.
Right. Well, that, and then you can also leverage, the terms, right? You can leverage the time, you can leverage the interest.
Yep.
Um, if they owe money on the property, you can always create a second and leave that second in place for a longer time.
Mhm.
There's so many different ways, but I mean that's it's creative, right? It's creative
Yeah,
financing.
absolutely.
Yeah.
Absolutely.
Yeah, that's awesome, man. I love what you're doing, and it's a different spin on what a lot of people just focus on, right? Especially going into it. First off, usually kind of like rite of passage.
Mhm.
What we see is, okay, fix and flip, and then we move into single family portfolio and stuff like that, and then you start considering down the road, considering commercial stuff. You did it the other way around, and obviously you're doing very very well. So kudos on that.
Thank
If
you.
somebody wants to maybe pick your brain a little bit, I know you're right before we click record, you were saying that you're pretty open to just having conversations with people and helping people out. You're at that stage. Where can somebody
Yeah.
get a hold of you?
Yeah, so recently myself and two good friends of mine started a new community. It's
Hmm.
called Thrive Community. You can find us on Facebook. And it's a community, I think we actually started it less than 10 days ago, and I think we're up over 300 members already.
Nice.
So growing rapidly, and we'll just do webinars where we'll help people look at deals. We'll have conversations, just try to, maybe connect them with other resources if they're looking for like a realtor or mortgage broker, general contractor. We're going to start bringing on different guest speakers as well that are, professionals within the real estate investment space,
Hmm.
other investors, people that coach and mentor people as well. And what we really want to do is just provide value for people. We realize there's a lot of people out there that, are sick and tired of their 9 to 5s, or they're struggling, trying to figure out how to get into real estate, what strategy to use, how to raise capital. And that's what we're there for. We're there to support them. So Thrive Community on Facebook, best place to kind of get a hold of us if you want to chat and need some help.
Thrive Community on Facebook. Okay, we'll be sure to put those on the show notes as well. Before we sign off, and thank you so much, Matt, for breaking that down. I think you gave us pretty much a checklist of what to look for when it comes to deal analysis in multifamily, and that translates very, very well into the U.S. market. I mean, principles are very, very similar. So, so maybe terminology may vary here and there. VTV, for example, with creative financing. But a lot of it is going to be, kind of plug and play when it comes to principles, right? Looking at smaller markets, 30,000 to or less. I mean, it's a shift for most people out there. We usually go after this big, fat markets because opportunity is there, but it's a different approach, a different perspective. So thank you for all of that. If one of my favorite questions is, if you were walking down the street and you ran into your 17-year-old Kurt, what would you tell that kid?
What would I tell that kid? I would tell that kid to don't try to work for somebody else. Become an entrepreneur, and also find your passion. And if you can do those two things, if you can believe in yourself enough not to go and work for somebody else, and you can discover what your true passion is, then you're set for, a happier life. It doesn't mean that, you won't go through the ups and downs like we all do. It is life after all. But at least you'd be going after something that means something to you. And I think the last piece of that is to give back. I think that I waited a long time to give back, not because I didn't want to, but because I didn't believe I had anything to give back. And I think one thing I've heard from other trainers, speakers, coaches in the space is, no matter where you are, you have a certain level of knowledge, and you have to think about, the billions and people on planet Earth. How many people know as much as you do about that topic? Maybe you think you're at a 5. How many people are at a 4? How many are at a 3? How many are 2? So you always have something that you can give back and share to help others. And I think that would definitely be it, is to give back earlier.
Yeah, and finding that out can be a little confusing, I feel, especially, I have a lot of students that kind of go that route. If we were caught up in survival mode all the time, it's going to be tough to see that, right? But still understanding that everybody has the innate talents that they can bring out to the world and they contribute in that space. There's always something that can be done to give back. So I love that, man. I love that. Kurt, thank you so much, man. It's been fun having you over, and definitely enlightening when it comes to the simplicity of the approach to the deal analysis and stuff that you broke down here. I'll definitely sign up. I'll look up the Facebook group, and I urge everybody out there, if you're looking at or considering, right, multifamily, commercial, or just tapping anything outside of what you're currently doing, to go check it out, because it's a good shift in perspective. You're looking at a different market, looking at different approaches to doing things. Somebody who's a lot of times we pick up bad habits when we go into the single family space first, and we think single family and in terms of commercial, and it's a whole different beast. So a good refresher on that kind of stuff every now and then is a big thing. So thank you so much, man. Guys, check it out at Thrive Community on Facebook, and we'll catch you guys on the next one. Fam, thank you for listening. Every week I bring you the real, the raw, the mindset, the case studies, and the strategies you need to build your own successful real estate wholesaling business. So if you haven't done so yet, make sure to hit that subscribe button and don't miss out on real life experience and information that can make you millions. It's time to join the ranks of successful wholesalers and real estate entrepreneurs like the one you just heard, and take advantage of one of the biggest opportunities that we have in our lifetime to generate wealth. So go to reiwholesaling.com, head over to my website. Again, that's reiwholesaling.com, and learn how to make big profits, make big money by finding, negotiating, and closing wholesale deals from your own backyard. You've heard the stories, seen the case studies. Stop thinking about it. It's time to write your own. Again, head over to reiwholesaling.com, click on coaching program, book a discovery call, have a conversation with my team, and you might get an invitation to join hundreds of students throughout the country who are leveling up on a daily basis. The writing is on the wall. Hustle is a season, it's not a business strategy. Take action, start building a sustainable and scalable real estate wholesaling business, and join the coaching program today. I will catch you guys on the next one. Talk to you soon. Stay focused. You got this.